Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator for startups. And our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these roundtables for a long time. This is the 375th session. We started tinkering with this format of online mentoring back in the fall of 2008, and then that blossomed into the full-fledged 1M1M program. So the event is being recorded. You will have the recording available on our YouTube channel. And not only this one, all prior roundtable recordings are available there. It's a very good body of learning material. So if you're looking for something to listen to on your commute or just download some of these or listen to them at wherever you are. It's excellent opportunity to learn. If you're live tweeting the show today, please use hashtag 1M1M and join us on Twitter at 1M1M, and you can also follow me at Shromana. We publish a tremendous amount of very, very interesting content, very inspiring, very educational, lots of case studies, trends, etc. So if you are a technology entrepreneur, a technology-enabled services entrepreneur, it's a superb body of work that you can follow along and learn from, and it's all free. So now these are the call-in instructions. We're not quite ready for call-in yet, but we will be. And this is a roundtable, so we do want you to participate. So eventually, when I put these call-in instructions up again, you're welcome to call in and tell us what you're thinking, what your questions are, what you would like to discuss. And in the meantime, you have the public chat available. So make sure you set your public chat to send to all participants, not to me privately, not to Maureen, not to the host, but you can chat with the entire congregation here and weigh in with your ideas, questions, issues, etc. Looks like we are going to start with Vinny Lingham. Vinny, are you on the call?
Yes, I'm here. Hi. Hi, Shromana.
Hi. Great. All right. Let me introduce. Folks, it's my great pleasure to introduce you to Vinny Lingham, co-founder and CEO of Civic.com. Vinny is a serial entrepreneur with roots in South Africa. He also has a venture fund, a small seed fund, and we're going to talk to Vinny about all of those activities. Welcome, Vinny. It's great to have you here.
Thanks, Shromana. Great to be here.
So you've had an interesting entrepreneurial journey. Tell us about Gift.
Well, Gift is my third company, Civic being my fourth one, and I think I've got a couple others in between there. Gift was a mobile gift card company which digitized gift cards and allowed us to not store all those gift cards in our wallets, but all of the digital wallets on your phone. I sold the company to First Data about 3 years ago, and spent some time with First Data, went through the IPO with them, and then I left to start Civic, which is my new venture focusing on digital IDs.
And what did you do with the first two ventures? What were they?
The first one was Clicks to Customers, which is a paid search marketing company, and it was back in the days where Google was launching and people didn't have the skills, the tools to run AdWords campaigns, and we quickly grew the business to quite a big search marketing company. It's been merged a couple of times, now part of $1 billion corporate. I sold that in 2007. And then I started another company called YOLO, which is a website building application platform. And we power ISPs around the world. I still have a stake in that business. It's still running in San Francisco and Cape Town. And so just a serial entrepreneur. Like I said, I've also got a VC seed fund in South Africa as well, which does
So what about Civic? What is Civic?
So Civic is a digital ID platform, so we're trying to make it so that you don't have to use usernames and passwords anymore anywhere you go on the web, and hopefully one day taking care of digital IDs, passports, etc.
Okay. And Tell us a little bit about your South African roots, and then we'll get to Newtown partners.
Yeah, I was born in South Africa in 1979 during the sort of peak era of apartheid. Very grateful to Nelson Mandela for freeing the country in '94, and then went to his first democratic election. So I've been very interested in the democratic process and how democracy spreads around the world, which is one of the reasons why I started Civic, I guess. Ultimately we want to focus on voting. But yeah, South Africa was interesting growing up there, and I left in 2008 to move to Silicon Valley to be closer to.
And all your startup activity has been in Silicon Valley or in South Africa?
Both. My first company was started in South Africa, and my second one started there, but it scaled in San Francisco. And then I'm also a shark on Shark Tank South Africa, so I make lots of investments in South African entrepreneurs as well.
Cool. All right, tell us about Newtown Partners. What is the focus? How big is the fund? What size investments are you making?
Yeah, it's kind of a private evergreen fund. We make investments anywhere from $25,000 to $500,000. And so, just as and when we find great opportunities and great entrepreneurs to back that are building scalable tech businesses in South Africa or even in other parts of the world. We just backed a company called uVal recently, and they're now doing a token offering, trying to digitize trying to tokenize the banking system in Africa, so you could use cryptographic tokens and make it cheaper for people to transact, send money to each other, etc. And that's busy launching right now.
How would you characterize the types of ventures that you like to focus on from Newtown? Industry sector, B2B, B2C, stage?
Yeah, we like very early stage. We don't mind high risk, so we go very early stage. But we like things that, look, it's always about the entrepreneur. So first of all, we find entrepreneurs that we like. And we like the sophisticated entrepreneurs, and it's very evident from us the way they pitch to us up front, whether or not they're or how sophisticated they are, really. And it's early stage. I prefer consumer, so I like things which are changing. I like the idea that, look, Africa is one of those places where there's a lot of corporates and oligopolies in there, and I like the idea that the two entrepreneurs in the garage can disrupt the status quo by building better products that consumers choose to buy over the entrenched incumbents. And so that's kind of like a high-level thesis for what I like to do there.
Okay. And so double-click down, and you started talking about geography, and you've said a few times that you're focusing on South African companies, but you also do companies outside of South Africa. Can you elaborate a bit on your geographical boundaries or footprints?
Yeah, I'm invested in a company in Germany called Olido, which is kind of a search engine for Airbnb type services. So you could effectively see what's available in a country by looking at all the sites that have inventory available. So it's like the way of searching for inventory for accommodation. I've got investments in, I think, there's an Israeli firm that's looking at doing cancer research around, it's cancer research using more sort of AI and machine learning. And then in South America, I'm invested in smart contract solutions, which runs Zeppelin. Basically, it's in the cryptography space. We're investing in what's it called? Flutterwave in Nigeria, which is a banking product as well, run by the founder of Mandela. Yeah, so all over the world, just where I find good deals.
So I'm going to flip the question now and ask you, what trends do you see in your deal flow? And in particular, what are the trends in Africa? What kinds of entrepreneurs are you seeing, and what are they doing? What types of ideas are interesting in Africa?
Well, I think the most interesting trend right now is definitely crypto tokens and ICOs taking off. People in Africa have been really starved for capital for many years. and now they can use token sales and ICOs to raise capital from a worldwide audience, people who believe and are passionate about the problem that they're trying to solve. So it's really taking crowdfunding to a different level, and I think we're seeing more of this happen across the board. And Africa in particular, I'm seeing a lot of African entrepreneurs rethinking their business models to become more token-based business models and raise capital on the basis of that.
Have you invested in any of these ICOs, ICO-based or token-based ventures?
Well, Wala would be the first one in Africa. Actually, the second one. I invested in another one called Augmentors. It's a gaming startup. They have a really good token called Databits, which they've put out, which is basically an augmented reality game, but it's pretty fascinating.
And what is your estimate of the capital requirements of token-based ventures like that? They tend to be quite, I've been talking to a few people who are looking at that, and they're one of the issues that they, as early-stage investors, they are a bit nervous about is these can be very capital-intensive. How do you parse that capital intensivity of a token-based venture?
I mean, look, I think it's you definitely need a couple of $1 million, but it's a lot easier to raise, $2 or $3 million, and then spending rands, for example, because you get 14 to 1. So $3 million would be enough money to definitely get a prototype live to market for the business around it. And so you get the value of people in Africa having lower costs of living, needing less capital, and it's easier to raise $3 million, easier, I would say, in a token-based offering to a lot of people worldwide than it is to raise it from one investor.
So you're saying that these token-based businesses are almost more interesting in Africa than in the developed markets?
I'd say it's because of the lack of capital in Africa. Token-based fundraising is going to be a bigger secular trend than, I mean, if you look at the US, for example, more money has been raised through ICOs and token sales this year than venture capital. That's kind of an alarming stat. My company, Civic, did a $33 million token sale in June. So, we raised $33 million on the back of what we're planning to do with Civic, and it's been a very successful direction for the company.
Okay. And what is the ecosystem in Africa? So you have Newtown partners. Are there other early stage funds that you get to syndicate with, or how is the ecosystem coming along there?
Yeah, it's actually very good. I mean, as an example, I invested in a company called Sweep South about 3 years ago, and it was a female CEO, entrepreneur. And when I invested in them, no revenues, like literally nothing. They're now employing about 4,000 women in Africa, relying on them for income. It's basically maids on demand, so it's like Uber for maids. And the business has grown ridiculously. And we only put the seed money in there. We kind of gave a bridge round in between. But the capital came from other VCs, and once they'd seen the traction, they came in and they backed it, and they scaled the business a lot more. So there is an ecosystem. I'd say that the real lack of funding is at the seed level, and maybe in the higher risk opportunities that people don't, VCs don't really want to take, etc. So then, there's a gap for the ICOs and token sales. But Aisha, and her company was a good example of where there is a huge gap in the market, and where there's a room to play for guys who want to take a lot of risk on people who traditionally aren't being backed by the formal sector. So women, black, female entrepreneurs in Africa aren't getting the support that they need. And so I think we take a pretty aggressive approach at finding these people who are gems and I would say the non-traditional stereotypical entrepreneur. In Africa, one of the problems in South Africa is you have a lot of disenfranchised white male entrepreneurs. And so when the government implemented black economic empowerment, which is a policy from the 90s, it sidelined a lot of people from getting jobs in the formal sector, and these would be the young white guys and white males who graduated, but it had an unintended consequence. They started becoming entrepreneurs, because they couldn't get jobs because of the government's policy. And so they wound up creating a lot of wealth. And the government looks back and says, well, why all the wealthy people, these white guys? And it's because, well, they couldn't get jobs, so necessity facilitated them going to start companies. And so people are finally realizing right now that real wealth isn't created by having jobs in corporates. It's created by starting companies. And that's why I think you want to create wealth in that sector, and you want to make sure the wealth is diversified. You look for people who are definitely highly skilled and capable, and but not traditionally who the VCs backed, et cetera, and you get in a chance.
What is your most successful portfolio company in the African market?
Definitely Chief Staff so far in terms of return on investment as well as traction. But I think Augmentos could beat them over time.
And what do these companies do? Give us a little bit of color on the company.
Chief Staff is the Uber for Maids service I just mentioned. And then Augmentos is a deal that I did on Shark Tank South Africa, which is basically augmented reality gaming. And from what I can see, it hasn't gone live yet, but the technology is unbelievable, and it's a really beautiful game. And so I think that we may, gaming is such a big sector that it will be exciting to see how they can take off.
And how do you read the exit opportunities in the South African market? Of course, your companies are still quite young. There's probably another 3, 4, 5 years before they exit. But what is your analysis of how the exit market is going to shape up?
Well, that's the beauty part about token economy. So if you look at the token for Augmentos, it's already trading at about 50 cents on exchanges. So you can get out, you can sell your tokens, you can hold it longer. It's interesting because you don't have the liquidity crisis anymore. I mean, you don't have to hold your investment for 7 years. You can just. So
that's only for the token-based businesses, though. What about the Uber for Maids, for instance?
Yeah. So that as you get subsequent rounds of funding from other people, you're able to exit some shares. Normally, a bigger VC will come in and buy some shares off you. And that can be negotiated. And in the case of Street South, I think the demand for the shares is so high that we could exit any point we wanted because there are other investors who want to come in. So I think it's more important to understand how you're moving through the various stages of the company's life cycle. So if you're a seed stage investor, can you exit to Series A? If you're Series A, can you exit to Series B? And if the company is doing well and it's about traction, the answer generally is yes.
So the assumption is that the early stage investors are exiting in the subsequent stages, and you have investors in each of those stages. So there are bigger venture funds playing in the market who can do Series B, Series C, and take out the earlier stages.
Yes, but it has to be high quality companies. So where they obviously have a lot of conviction for the company. If it's a party round where there's a whole bunch of guys coming in and everyone's just sort of putting money in, they're not sure, it's kind of a flyer bet, you can have a bit of a harder time exiting. But if it's one big fund saying we're going to come in and take a bigger position, you could probably sell 5% or whatever it is and exit and give them a bigger stake. And so that's kind of how it works.
What about strategics? What role do you see Naspers playing, for instance? Naspers has played a big role in exits in India. What is their position in Africa?
Naspers is a really good investment house. I think they're really good at investing in companies. They, if you look at South Africa, they've been terrible at operating them. And so as an investment house, I think they're good, but they're really good at later stage, not early stage.
Sure. They're good at exits, right?
Sorry?
They're very good for exits.
Yeah. They're good for exits in that sense. And so later stage, large companies which have got infrastructure and whatever, that's fine. They're good there. In early stage, founder-driven, founder-led businesses, I wouldn't say they're the best, and I think most early-stage founders, you exit in Naspers, it's probably not the best exit you could have gotten, just because they don't do very well at managing early-stage companies post-exit.
I see. Okay. Now, the next few questions actually are not specific to South Africa. I'm going to ask you these questions more in the context of your global activities, Silicon Valley activities, and so forth. So these are trend questions. The first one is, how do you process the current investment climate where capital is moving further and further upstream? You know, the traditional VCs are raising bigger and bigger funds. And how does a seed investor, or an entrepreneur for that matter, mitigate the Series A gap?
Honestly, it's been doing an ICO token sale. I mean, the Series A gap has been crushing for many companies that have got early stage traction, big visions, great teams, and can't raise capital. I mean, we went out to raise capital a year ago with Civic. Now, this is on the back of, I mean, I sold my last company for north of $50 million with only $5 million raised. I came up with a pretty decent sized exit in 2 years. And I raised a seed round, and I couldn't raise a Series A. I mean, I got a term sheet eventually, but we didn't like the vision the investors had for the company or whatever else. So we turned it down, and we went to do a token sale. But I spoke to like 50 investors, and you know what investors tell you on stage when they go up and talk is that, oh, it's all about the team. The team's, you know, this is what we don't really, you know, the business changes over time, blah blah blah. But when it comes down to reality, and they're sitting in the room, they look at the business at that point in time. And so a year ago, trying to convince VCs that blockchain is going to be big, that Bitcoin is important, that this is, you know, the way of the future, that you can do verified blockchain-based identities, and it would be important for the world, was like literally the most difficult thing I've ever done, because it's so hard to convince them of something that hasn't happened yet. And this year, I've had more VCs get knocked on my door than ever before, but it's too late now because we already went and raised our money via token sale. But the funny thing is, when I'm going to the sales, Vinny, you're great. We love you. You've got a great background. You're a strong entrepreneur, et cetera, but we can't get our head around this blockchain identity stuff. But it's exactly the opposite of the drill that they put out when they're up on stage, saying it's all about the team. It's like there were no questions in the team. There were only questions in the business. So it's one or the other. And I think the Series A crunch has been because VCs just don't have the conviction these days, and unfortunately, a lot of VCs are just a bunch of kids from, you know, the MBA at Harvard and now working in a VC fund and never built a business before, and that's the problem.
Well, you know, the market is full of early-stage VCs, so-called early-stage VCs. There are pre-seed funds, seed funds, post-seed funds, pre-Series A funds, and you know, almost everybody who has had an associate or a principal job at a larger venture fund and didn't make partner has started a small VC fund.
Exactly. So you got the blind leading the blind.
So the other trend question is, how do you parse unicorn mania? By the way, all these 500-some little funds are looking for unicorns. Almost all of them are looking for unicorns. Unicorns, by definition, are rare, but everybody's looking for unicorns. So my question actually is, as a seed investor, if you also chase unicorns, you could get buried under later stage liquidation preferences. How do you protect yourself? One way to protect yourself, of course, is what you said earlier, is just, you know, do the early stage and exit into the later stages. That will take care of that. Is that your primary strategy?
Look, as an investor, I think I try to take a long-term view on things, and so you know, chasing unicorns. I mean, I've got one unicorn in my portfolio right now. I've made about 70 or 80 investments. And even then, the unicorns aren't liquid. So I'm probably going to wait like 2 or 3 years to get liquidity out of it. The guys are sitting on a couple $100 million in cash. They don't need to sell any shares. You know, it's just admin to try and do a transaction. So I think my strategy is just to make good investments behind good teams and just, you know, to be patient. I think patience is, if the opportunity comes to exit and I can sell some shares, sure. I'll consider it, but as an investor, you're running the company, and you basically have to put, you know, when I write a check for investment, I kind of kiss the money goodbye. I'm like, you know, I don't expect to see it anytime soon, because if you put the pressure on yourself to see it soon, it's just you're not ready for doing that sort of investing. You should probably stick to stock market.
So is Newtown Partners your own money, or is it does it have limited partners?
It's just myself and my co-founder, Luke Larson.
Okay. So you're not answerable to limited partners. You can do pretty much what you want.
Absolutely.
No, that's very helpful. Okay, so my last question, trend question again, is, you know, we are in 2017, lots of stuff that have already been built, and there are so many ideas out there, especially now you're looking at B2C ideas that seem like a feature of Facebook or a feature of, you know, Google or something. These are basically niche things, niche opportunities, and in some cases these businesses probably have to be built with the idea that it'll, you know, you put in a maximum of a couple of million or maybe even less, and then the company gets sold for, you know, 5, 10, 15 million, depending on, to one of these larger companies that can actually take it to market. What is your, you know, how do you view these types of opportunities?
Look, I think it's important to remember that this whole, you know, if you make startups a career for yourself, and it's a long-term learning. I think you just take it in your stride. I think it's part of the things where you have to just let the, you know, see where the dice rolls, you know, and you have to just learn what works for you, what doesn't work for you, and failures become learning opportunities. And I think some people get just too attached to the outcome, you know, versus like what's the process, what's the journey, and how you can apply it the next time.
Are you willing to invest in these kinds of companies that you probably know just because you have seen plenty of companies and you have been around? You're not this young MBA who has no experience of actually doing startups. You can tell that this is probably not going to be a unicorn. It's going to be a small thing. Would you invest in something like that?
Probably not, for me personally. Okay, it's not that I'm chasing unicorns, it's that I'm chasing businesses that have high failure rates. Okay, and so I go after things that I'm pretty certain is probably a bad idea, but if it comes off, it's going to be a big one. And so when I go after something which is probably a good idea, but if it pulls off, it's not going to be worth much. It doesn't balance the risk reward that I'm looking for.
That doesn't interest you. Got it.
Yeah.
All right. Well, very good. This is a very interesting conversation, Vinny. Thank you for coming, and let's keep in touch.
Thanks, Joanna. All this. Cheers.
Bye-bye. Okay, folks, we're going to go to the entrepreneur pitch part of the session today. I'm going to set some of expectations before we dive in. First and foremost, this is a working session, right? You're here to work on the strategy for your business, and our entire goal during the session is to help you move forward in your venture. So we're completely on your side. This is a safe place. There is no one's trying to put you down or anything. It's purely constructive critique. One thing that might happen in the course of the discussion is that you might disagree with the feedback you get here. That's okay. Don't feel bad about it. Just take the feedback and consider what you want to do with that feedback. Obviously, my feedback is based on having worked with lots of entrepreneurs, as well as being an entrepreneur myself, having done lots of strategy work. But it's ultimately your venture. So whatever decision you make is your decision, and you're going to, execute the way you want to. One thing, however, is written in stone, and you have to take that into account. Not all businesses can raise money. Not all businesses should raise money. And raising money doesn't guarantee success. So we are going to start, I believe, with Scott Mayhew. Is Scott on the call?
Yes, hello.
All right, go ahead, Scott.
All right. Hello, everyone. My name is Scott Mayhew. I'm from Prince George, BC. As you can see, that was my Halloween costume. I was a dealer. So my fun fact was when I was younger, I wanted to be huge. Huge Holdings is my company. Next slide.
All right.
So 20 years ago, I knew I'd become an entrepreneur. I bootstrapped my company, roughly $5 grand a year, kept everything running like servers, domains, websites. During that time, I became a Class 1 driver. I drove water truck. I was a city bus driver and spent a lot of time in the oil patch. So I started programming. So I'm basing this on one app that I own. I started programming it in 1998, built the company in 2000, and I started buying apps to learn, to keep my skills upgraded. And I outsourced in a few of the years. I recently hired a programmer, and I acquired the Rummoli rights. Next slide. So as you can see, Rummoli is the main game. I have several apps in my collection, but I'm going to focus on this one. It's a Canadian game. It's been around for over 75 years, and it's played by family and friends around the holiday. So I use this because everybody gathers around the family, around holidays, and they play board games. You can find it, the multiplayer under the Rummoli community and now mobile app. It's a social game played by 2 to 8 people. It has a touch of poker, rummy, and gambling. We've used pennies, tokens, nickels, dimes. Common cost to play is no more than $1. Gameplay can last for hours or until one of the big pots is won. So with my online version and the casinos, we can offer a higher amount because of the technology. Next slide. So my goal has always been 1 million users. With the mobile apps, we can reach more players faster. I partnered with a programmer to finish and improve the apps, and we need to hire more staff to move forward in the future endeavors. What makes this venture exciting for me is I own the rights to Rummoli and Stock Ticker. To further my reach, I've partnered with a company that builds electronic software. You can see the table there that can be placed in casinos. By partnering, we'll reduce the entry time by 2 to 5 years because of all the legal stuff, having it set up properly. As Rummoli is Octagon, my future plan is to keep the Octagon shape. That's Rummoli's legacy. It's been around 90 years. It'll be around another 100. Next slide. Now, my target market, I'm basing it on the Canadian population. As in business, they say if 100 people enter your business, 10% will buy. As I said, it's a 90-year-old game. I'm taking an aggressive strategy to this because the holiday is approaching. I launched my basic standalone app last week, and it gave my programmer time to upgrade while I promote and market it. Over the years, mostly family and friends, I have 250 followers on the Rummoli page, consisting of 64% women and 34% men. I've used Facebook ads, mobile links, word of mouth to grow my audience. And I'm also looking to promote it at larger events like hockey games, et cetera, et cetera. So I've recently changed my app to 99 cents because I've held on to it for so long. I started at $9.99 and I've moved it down, hopefully to free. With the ads, in-app purchases, I'm going to create a dealer pot, which instead of 9, there'll be 10, and into the future casinos. Next slide. So here's my iTunes page. As you can see, I've got 9 apps. They're all doing well. This is based on the last 90 days. I believe it's because I've marketed a few of them. being the Prince George app, which caters to students and bus times. I have a couple scratch tickets, which is just for fun. I have a dice game, Stock Ticker. I have the card game, Rummoli, and the Zuma Poker down the bottom. That is sort of my app. Thank you very much.
So what is, do you have revenues at all in your business?
I don't have a whole lot of revenue. I've had 11 downloads in the last 2 weeks for the Rummoli, and it's been $40.
No. So your questions for me, would I play? I'm not a gamer at all, so I would not play. I have no interest in spending time playing games. But there are lots of gamers out there, and I imagine you would find people who would be interested in your app. And what I like about what you said is that this is a game that has lots of brand recognition. The Rummoli game has a lot of brand recognition. It's like Monopoly, right? Everybody knows Monopoly, and that really helps to sell an online Monopoly game because there's market education already present. So that part I like a lot.
Correct.
And it's not like I won't just play Rummoli. I don't play Monopoly online either, although even as a child, I grew up in a large family with lots of kids, and we used to play Monopoly, and I used to love playing Monopoly with my cousins. But I just don't, it was part of it was just that feeling of being with the family and being together and playing on the board game. But I really don't spend time playing online games. But we do online game ventures, and it's not important that I don't play. The important thing is, do you have a segment of gamers, online gamers, casual gamers who would play? And I think the answer is yes. The issue, however, is that there are so many games out there. Getting investment for a game that doesn't already show traction is almost impossible. So if you're looking for an investor now without being able to show any traction, that is, at least in my network, my investor network, it's unviable.
Right. Well,
so you're going to have to continue to boost. So just a second, you have already bootstrapped. You know how to bootstrap. You're going to have to continue to bootstrap, and I think your instinct is right, is to just put your emphasis on Rummoli and really get it going and show velocity, and then perhaps you can raise funding, and you're going to need to show a TAM of how you're going to, what kind of money is this business going to generate and is game going to generate, and you need to show that your assumptions are validated. Those are the things that I would do in the short term, in the 3 to 6 month time frame, and see where you are, and then decide on what is the next step. Are you showing metrics that are then financeable?
Right.
Currently, the company is not fundable. It may get there.
Not at this. Yeah, right. not at this point. It's still
That's
early.
Correct. Yeah. But I think your bets are interesting. I think taking a game, a brand that.
Hello, did I lose you?
Oh, we can hear you.
Oh, okay, sorry. So when I went over some of the pitches, I was looking for certain particular to iPhone apps. And a question I came up with, you said the gaming industry was quite crowded.
Very crowded.
Very crowded. So I do have a hard road ahead of me.
Yeah.
And when I asked the question, do you know anybody that's done this before? And as I was looking through the slides, you do have a couple that have tried this before.
Yeah, we have seen tons of gaming companies. I mean, there have been lots of gaming companies that have been successful. So it's not like people haven't been successful in games. There have been runaway hits in games, in certain games. Right. We just published a story, it's on the blog. If you go to the blog and look at the story of RoboSoft, they're doing significant revenues of gaming, and it's a very good company. So yes, absolutely. There are lots of case studies of successful gaming companies.
Yeah, I did write that one down. I'll have to look for it.
Yeah. Okay. All right. Well, if you hang around, I'll explain later on how to use 1 million by 1 million if you want to use it. But let me go to the next presenter. Thank you. Good, good beginning for sure. And let's see how you navigate.
Thank you very much.
Okay, we are going to Jasmeek Singh. Jas, please unmute your line and tell us what you're working on. Is Jas on the call? What's going on?
Hello?
Yes. Is that Jas?
Sorry, I was just dialing in, calling in from India. So, good morning, Sumana, afternoon, evening.
Good morning.
Yeah. So, I hope my voice is clear before I can start.
Yes, please start.
All right. So, I'm not an entrepreneur, right? Yeah, I do want to become one. And treat me as an early stage newbie. I come with a lot of experience though, but not in the entrepreneur world. And just like any other person, like want to do something of my own, because I think it's just time. Maybe I took longer to decide, but age is no bar here, right? So the tech I'm going to present is more to sort of seek feedback. I'm open to feedback, and that's the only reason I'm coming to this call, right? I want to explain, what this pitch is about, what's the problem, and what's the solution I propose, and take feedback. I've been talking to a lot of people, so the bag is not complete, right? There are a few cracks in it. I get that, but I think what I look forward to your coaching and feedback on how do I get investment ready, if you will, right? So that's my whole approach or expectations from this 15 minutes, right? So if that sounds like something worthwhile, then I'll just start on how the presentation is.
Yeah, go ahead with your presentation.
Right. So definitely, I would like to tell the audience, what's the problem, I would like to sort of solve, right? And it boils down to, there are a lot of companies in the world, but, there are different segments of companies as well, right? The problem statement is the product engineering organizations, right? They want to be more innovative in terms of how they can accelerate the time to market for their products, right? We can take an example here. Let's say, I'm just making it up so that the analogy sort of fits in and the audience, understands what I'm trying to say here. So think of Intel if they make chips, right? So how can they accelerate a chip launch which ideally might take, let's say, 120 days? Again, I'm just making this up as an example. It takes Intel to launch the new Neon series, something, blah, blah, blah. It takes 120 days. And, that's a reason, there's a problem there, right? Because with small to large organizations, there's always some challenges, right? In this case, the challenges which I've, listed down is, it's not very easy, or it's easier said than done to reuse the intellectual properties, the component which ties to the hardware aspect, and the code, which is the software, right? It's not easy to really reuse it in an effective way. A lot of iterations happen, systems are disconnected and whatnot, and there's always an non-integrated hardware and software aspect when a company wants to, let's say, raise a bill of material, which really happens when someone needs to sort of say, hey, you know what, let's launch or let's start building this product, right? So that's the whole problem statement, right? How do we help companies accelerate time to market? Right, next slide, please. And please just question all the questions you have, right? So the solution which I'm trying to lay out here is, we know definitely that's a problem, right? So the solution is by using 3 layers. One would be the process side. That's like keeping in touch how typically you run an organization, right? And, relying on data. Because I think, with data, the tag doesn't make sense, right? If you don't have smart or planned data into your artificial intelligence smart algorithm, it won't make sense, right? So data plays a key important part if you talk about artificial intelligence, automation, analytics, and whatnot. Data is the key, right? And we have big data. We have lots of data. The companies have already existing data within the smart ERPs. It's just that are the companies do the companies first have the appetite to do something innovative, or do they have the right skill set, for example, or is it just too disruptive for them, but they want to do it because they're losing revenues, right? They could launch, let's say, 3 products versus 1 in a fiscal, right? And the third layer would be the new IT technologies I was sort of referring to. So the solution is, if you blend all these 3 together, right, you sort of break up from the linear way of doing things, right? It's modular, it's adaptive and on-demand. I come to that when I sort of come to the next slide, but that's the solution, right? How do we ensure if we do a mix of that, that would definitely accelerate the time to market. Well, this is a B2B, it's not a B2C. The only reason I haven't chose the B2C, honestly, Shamara, I fear, I'm scared of doing B2C because there's so many things happening, and it's really driven by, the customer sentiments, which change almost every year, every month, every quarter, right? So I don't see a sustainable model right now where I would want to take a B2C route. It's B2B, and then so can you come back to the next previous slide, please, Maureen? So the market slide. Yeah. So in terms of how I'm trying to define the market, right? See, time to market could be relevant for a lot of industries. You think life sciences, you think consumer goods. They might not always have an embedded software or hardware piece to it, but accelerating time to market would, would resonate with a lot of industries. But again, based on the feedback from my network, I had to drill it down to define a market first, right? And based on the research I feel, within a semicon industry, there are different sub-industries again. An integrated device manufacturer, which basically is a company which designs and manufactures, the integrated circuit. You would have some players which get outsourced, but what I'm trying to say here is, these are the players who do the manufacturing themselves, who have designers and engineers, under their company, right? So that's a huge potential. Obviously, there could be a million logos there, but just to give an audience a sense, this could be the companies we can, if you take the solution to, it would really help them. So
Jasmeek, I have a question here. Is there a reason why you've chosen these electronics companies like the Toshibas and the Microns and the Texas Instruments and so forth, the Renesas? Is there a segmentation in there?
Right. Excellent question, because I work with these companies, right? I mean, in the sense, I know what they do for a living. I talk to these companies, or at least I have counterparts within my organization who work day in, day out. I get to hear a lot first-hand information on what are the pain areas, right? It's just much more closer to the use case or the solution I'm trying to say. Like I said, it's industry agnostic. You could take that framework, take data, take the processes and new technologies. It is not
right? Industry agnostic, and that's the point that I want to make here. Is the Indian services companies, software services companies, for a long time now, for at least 20 years now, have scaled. The ones that have been able to scale have scaled on the basis of this premise that you're pointing out, that reusing of IP and reusing of software building blocks. So I think the question that is more pertinent is, in the types of companies, in the integrated device manufacturers that you're pointing out here, is there something that is specifically that you're seeing because of your knowledge, because of your domain knowledge of having worked with these companies, that is different and that makes your case relevant to that segment?
Right. So, see, I can definitely take an example of Intel, where we've been doing a lot of workshops, and we've been trying to understand what are the pain areas. And it's not Intel. I could give you, Qualcomm, Intel, Western Digital, these kind of companies. Like I said, it's not that they do not understand, or they're not trying hard enough to innovate and ensure that they have less cycle times, right? Again, going back to my example, right? If Intel knows that the iPhone X is releasing in a year, right? Let's say this was a conversation or a thought happening a year back, they would have planned and ensured. But the way these companies work, they spend a lot of money on R&D, right? Having said that, organizations are not that synced where the R&D guys talk so frequently and aligning themselves to the engineers and designers, right? And do they sort of have the appetite again, to, let's say, invest in something called a digital twin, which is nothing but you get a twin in a digital format before the product is even physically prototype, right? So not all companies are doing that or are even aware. Like I said, you know,
I'm going to stop you there. We are quite far into your presentation. We've spent a lot of time. We've already spent 10 minutes.
Yeah.
And I don't understand what you do. I was under the impression that you're talking about helping companies with reusable blocks, reusable IP. Now you're talking about helping them, helping Intel innovate. I just don't buy that a little company in Delhi is going to help Intel innovate. So I don't understand what you do at this point. And that's not good. As a presenter, as an entrepreneur who's presenting an idea, and I'm probably one of the smarter people that you'll find in your audience, if you can't get through it after 10 minutes, what you do to me, that is a real problem in your presentation structure.
All right, I'll take that feedback. I had spent maybe too much time. I should have gone through and get more insights on what is the solution, right? It's modular, there are 18 modules. Okay, fine, point taken. So am I out of time? Like, or
you're more or less out of time, but it's like, can you tell me in 30 seconds, what is it that you want to do?
Right, so I want to build a solution which is modular, and it has like, the framework has 18 modules, right, which sort of solve different pieces within the life journey when we talk about a new product initiation, right? All the way from demand sensing, figuring out the supply chain, making it more reactive to the right data and tech infusions. And where I'm saying, like, if it would take 120 days in a typical scenario for a company X, using the solution, that time to market can be reduced to, let's say, 65 or 70 days. Right? That
it sounds like motherhood and apple pie to me.
All right.
And just to give you some comments about funding, based on where you are, there is absolutely no chance you're going to be able to raise funding. You have a very unclear concept, and funding is probably actually 24 months away for you, because people will only fund your company once you've shown validation and some level of credibility that you have a clear understanding of what customers are looking for, and you have a clear problem statement identification and a clear solution identification. So please do not operate under the assumption that with what you have right now, you're going to get money to operate the next 24 months. You have to reverse that assumption to thinking that it's going to probably take you 24 months of bootstrapping before you will qualify for funding.
All right. Yeah, I've taken notes. I hear you. Yeah. Thank you for the feedback.
And you really need to get really, really specific on what you are doing, what you're building, and this, very broad-brushed way is not the way to do product marketing or product positioning at all. So that's all I'm going to tell you for the moment. Hang on, I will explain to you if you decide that you want to use the program to learn what you need to learn. You have a lot of learning to do here. If you want to use the program to do that learning, that's fine. I will explain to you how to do that. I have one more presenter that I want to work with first, and then I will get to both explaining to you how the program works as well as taking more questions from any of you who have more questions, okay?
Sure. I appreciate the feedback. Thank you.
You're very welcome. All right, Mithun, you're up next. Mithun Kadur is actually a fresh, very, very new, as of yesterday, premium member of the 1M1M program. So Mithun, welcome.
Yeah, thank you. Thank you, sir. Thank you. Good morning, everyone. So we are, can you go to the next slide, sir, please? Okay. My name is Mithun Kadur. I've been in supply chain and logistics for the last 15 plus years. Most recently, I used to work for Bed Bath & Beyond as running the omnichannel and customer service applications with a revenue of around $3+ billion. And I've worked in the past with most of the retailers in North America, and have worked in product development as well. Fun fact, I am an avid follower of Packers. I lived in Green Bay for 6 months, love the team, and sad to lose Aaron Rodgers. That's my interest. Been a founder for 2 companies, And Belus Mantra was the founding arm for Dispatch Global Services, bootstrapped some early 2015, worked in stealth mode, and come 2016, the birth of Dispatch, or Sagisu, was born. We have gone through its journey. We'll give more insights. Can we move to the next slide?
Sure. Yeah.
So what are we doing? We are in the process of connecting supply and demand. Our intent is to build a three-sided marketplace where we can connect supply and demand. Sagisu comes from an Indian language called Kannada, and it means commercial transportation. And that is pretty much what we do. Can we move to the next slide? So our vision is to be one of the largest non-asset-based transportation logistic company, and starting with India, we have launched our operations in Bangalore and been operational since May. We have also, in the last 2 months, we have launched our operations in Chennai and Hyderabad as well. Some of the core principles of our journey has been towards providing the best customer experience. We're trying to invest more in our technology, and we're trying to see how best we can provide a seamless experience for shippers and their customers and the drivers. So if you go to the next slide, I'll talk about the pain points in the industry itself. I'll try to connect
and
with the
Mithun,
dots.
you're doing this, you mentioned you're doing this in India, so your target market is all India?
That's right. Right now, our target market is India. That's right.
Okay.
So I want to talk about current state of affairs with respect to businesses. I believe, and from data what we have collected in the last 1.5 years, suggests that commercial transportation is broken in terms of how the experience is available to the businesses and their customers. Some of the challenges what we have seen with businesses include like unreliable transportation services. There is no visibility to delivery schedules. Pricing is there isn't supply and demand variables that is controlling the pricing. It's off the charts when it comes to pricing. We send people out in the market trying to find out how much does it take to ship 3 kilometers for 750 pounds of merchandise, and we saw a pricing variation from 250 rupees all the way to 2,500 rupees. So right there we saw there was a lot of challenge in terms of understanding the supply and demand itself. So we also see that some of the challenges pre-Uber exist in the commercial transportation space. Can we move to the next slide? I'll talk about the second component or pillar of our business which we want to focus on, the driver experience. In the transportation industry, the driver today in the Indian market struggles to find work. His best source of work is through connecting with transportation agencies. And some of the attributes mentioned here are his problems, what he has faced as a driver. There's a lot more to it. As we go along, I can talk about it. Can we move to the next slide? Now coming to the customer. The customer journey is completely forgotten. There isn't a service or a platform that connects the three parties together. And this is where Sagisu was born, with us building a three-sided marketplace in commercial transportation, connecting businesses, drivers, and the business's customers. That is the whole idea. And
Mithun, I have one question. I understand what
Sure.
you're trying to do. Why is it a three-sided marketplace? Is the driver not connected to the shipper? Is the driver not working for a shipper?
so if you move to the next slide, I'll talk about that as to why that is very critical. Today, the way the driver is connected to a shipper is through a goods transport. If you move to the next slide, please. Next slide. Yeah. So today, the drivers are connected to the businesses through agencies called goods transportation agencies. these are legacy physical assets, third-party logistics equivalent companies which are out there, which are trying to connect businesses with the drivers. Now, the GTAs can also own their own private fleet, and they can also have drivers associated to them. So the only way for business to do work with the GTAs are through picking up the phone.
So you are basically replacing you're becoming a competitor to a GTA. Okay, got it. All right.
Eventually, it's a hard market to get into, and eventually we'll replace. Right now, we're working with the GTAs and the businesses. Eventually, we intend to be the platform of choice, which connects the businesses with drivers in the most seamless manner.
Right. Yeah.
So there's another observation in the industry. If you move to the next slide, so we observed that 95% of the trucking industry has no onboard computing, and that calls for innovation and change, and that's where we're saying we can be better. Can we move to the next slide? So our platform, it connects three things: businesses, drivers, customer. Very simple. We have how do we acquire customers today? We aggregate transportation through enterprise customers. We are working on two markets: contracted market and ad hoc market. We want to launch the B to SMB market, which is on-demand service. Anybody should be able to go ahead and place an booking for commercial transportation, which essentially connects with the drivers. The third model, the third customer acquisition channel for us is subscription as a service. There's a lot of businesses which have private fleets in the range of 3, 5, 10 trucks. All of them do not have an opportunity to invest in technology. We, being a middleman, we have the opportunity to sell our platform as a service. And there is a lot of interest, which we have not yet tapped in, but that's where we are. Right now, we are revenue positive, contracted market and ad hoc market. We are live. If you move to the next slide, I can talk about furthermore with our customers. So we started our operations in May. May 10th, we had our first customer. All through the last 5 months, we've been adding customers, and we are growing 60% month over month. And we're trying to capitalize on the growth and move on to expand further. That's where we are. So where is this whole...
Mithun, one second. Can you explain to me what is the business model with these customers?
All of them are on contracted market and ad hoc market. So essentially, we're trying to connect their business with their customers and drivers. Reliability is one of the biggest...
These are the shippers. These are the shippers who want to deliver their merchandise to the Indian SMBs, and you are trying to facilitate that process. So how much are they paying you?
How much are they paying you per transaction?
What is the business model? Like what is the revenue model?
We have a contracted market where we have revenue generated per trip. Every trip we have a revenue generated. We have contracted trucks for each of these customers, and we have ad hoc market. We aggregate transportation for these guys across. We have a supply team which works with the supply side.
You're taking a percentage of each transaction.
That's right. Absolutely. Okay. You're right. You're right.
And what is the average transaction size?
Average transaction size is per trip. I'll have to look at my numbers. I think it's on 1,500 rupees or something like that.
And 1,500 rupees is gross or net?
It's gross.
Okay. So you take what, 10% of that or 15% of that?
We are operating between 10 and 25%. Some months, it's dependent on our ad hoc market. If the capacity of ad hoc trucks are utilized, if our utilization is higher, we see a jump in our margins. Since May, our margins have increased from 9% all the way to 25%. And once we invested in ad hoc market further, it has fallen down further to, again, 15%-ish.
Got it. All right. Okay, I understand. Go ahead.
So one of the questions would be, why Indian market? It's the second fastest growing logistics market in the world. It's growing at 13% year over year, China being number one.
It's a big opportunity, absolutely.
That's one of the reasons. Trucking industry itself is a $130 billion industry. That being said, we are not targeting 130 billion per se. We're targeting one by 100th of the overall opportunity itself right now. And what we have also seen is the e-commerce side, there's a lot of movement from physical to digital space. Essentially, there is a growth in shipping, which essentially calls for more commercial transportation. And that has an impact on us. We've looked into the vehicle sales as well. The medium and heavy commercial vehicles are growing at around 19% year-over-year. The light commercial vehicles are growing at around 11 to 13%. Light commercial vehicles are the Tata Aces, those and the smaller vehicles, which transport up to 1,000 pounds in freight. The medium and heavy goes beyond that. That's our observation. So that's where we see an exciting opportunity.
One thing you need to do, as you know, homework from this presentation is go through the market sizing module in the curriculum and come up with a bottom-up market analysis. This is top-down. Top-down is all very well, but you really need a bottom-up to really assess what is the market opportunity. And we and investors, everybody basically are more interested in bottom-up. Top-down is kind of irrelevant.
Sure, understood. We'll come back at that. I'll come back at that and I'll provide a few more slides on that. We have a bottom-up approach as well. And we have built our revenue model and we have built our financial models as well. I'll share that later. With respect to revenues, we started in May, Q2 of 2017. We have grown to around $176,000 in revenue year to date since May. Every month we have seen a growth between 50 to 70% month over month. For the last quarter, our plan is to hit around $350,000 in revenue. And
this is gross or net?
Gross.
Okay, so this is, remember in marketplaces, terminology you have to be very careful about. This is, you have to upfront say that this is gross revenue, not, because when you say revenue, we are typically looking at net revenue.
Yeah, understood. Yes, gross revenue of all transactions.
Yeah.
Can we move to the next slide? So October, we made around $55,000 in gross revenue. Our current gross revenue per day is around $3,000. So we see a potential to hit around $300,000 in a mark for the last quarter. And it's been an exciting journey till now. We have around 30 employees. We're trying to see how we can disrupt and take it to the next level. We're trying to raise capital up to $2 million. The idea being the user proceeds will go into R&D, 37% into R&D, 25% into operations, 25% into sales and marketing. Right now, our customer acquisition cost is zero. All our business has come through referrals and business relationships in the past. And we're trying to get them no marketing to date. 100% operated on stealth mode.
So Mithun, I have a bunch of pointers to you. Since you've just come into the program, you probably haven't had a chance to familiarize yourself with the curriculum. So you will see when you get into the curriculum, there is a comprehensive module on financing. I recommend you go through that module. And we're actually in the process of upgrading that module because we've generated a lot of different funding-related discussions that we want to incorporate in there. But you will have all that within the next few weeks. But already it's a very comprehensive module. There is a template that you'll find, which is an investor template. And that's the investor template that you're going to need to flesh out. And as you do that, one of the core issues with investors' pitches is bottom-up TAM analysis. So definitely pay a lot of attention. I love the fact that you are generating revenues, that your business model is validated. The statement that customer acquisition cost is zero is not a reasonable statement because at scale, customer acquisition cost is not going to be zero. So right now it's all referrals. Great, fantastic. Let's push that as far as possible and get as far as possible in terms of gross revenue with customer acquisition cost zero. But we do need a customer acquisition strategy that is beyond referrals, right? Because referrals at some point are going to run out, and we're going to need to acquire customers at velocity and we're going to need a strategy for that. So we do need to put together a customer acquisition strategy. So start working on that, and I will work with you in, upcoming roundtables as you have a straw man, and we'll start discussing that and figuring out what is the right way to present that. So I would say for now, if you could, as the next immediate steps, if you could get the bottom-up TAM analysis worked out, and I'll review that with you. If you get a customer acquisition strategy worked out, I'll review that with you and start putting together an investor pitch that follows the format. Then we can, make a lot of headway. I know you have a lot of travel coming up, but all these things you can do from wherever you are in the world. And when you're ready for another presentation, we will just discuss live.
Sure, absolutely. Yeah, thank you very much, Laura.
You're very welcome. All right, folks, I will start the section on explaining to you how to use the program. If you like what we're doing here, and that includes very candid feedback. You saw I gave earlier presenters, very candid feedback on where they are in terms of their fundability and clarity of presentation, clarity of value proposition, pain point identification, and all of that. If you have appetite for clear feedback and actually working on taking that feedback and building, putting one foot forward, one foot before the other, as you build the blocks of a serious, viable business, that is the kind of entrepreneur we define as serious entrepreneurs, and that is the only kind of entrepreneurs we are interested in working with. The rest, with people with unrealistic expectations that people will come up with concepts and some investor is going to write checks for them to develop those concepts, these kinds of entrepreneurs never succeed, and they don't fit our framework at all, and we are not interested in working with these kinds of entrepreneurs. Now, in terms of resources, you'll find everything at 1Mby1M.com. There's a blog which is free and which is chock full of educational, inspirational material that you'll learn a lot from if you follow it regularly. The Entrepreneur Journeys book series is available on Amazon. There are 12 volumes, and you can double-click down on a particular topic, whether it's bootstrapping with a paycheck or e-commerce ventures or billion-dollar unicorns, and you can start your journey there. These are case study-based books. Each book has 12 to 16 case studies. These roundtables, today is the 375th roundtable. These roundtables happen every week, and you can participate in as many roundtables as you like. And again, great learning opportunities. Recordings are great learning opportunities as well. Our full acceleration program is 1M1M Premium, and that offers extensive methodology guidance, a full curriculum, online curriculum that you can study at your own pace, and you can plug in your methodology gaps. There are templates, there are video lectures, case studies of over 750 successful entrepreneurs. We help you with business development in the premium program, introductions to any number of people, customers, potential channel partners, investors, media analysts, all of that is part of the program. If you start off being not ready for funding and want to become ready for funding, that process, that journey of becoming fundable is something we help you with. And when you are there, we introduce you to investors as required. We have a very, very deep Rolodex of investors. The 1M1M self-assessment is something that we ask you to put your ventures through and ask yourself these questions. These are questions. If you get into a funding discussion, investors will ask you these questions, definitely. So you better ask these questions of yourselves because you are the first and most important investor in your company. So you have to answer these questions. And if you run into methodology gaps, like you're facing a question that you don't know how to answer, a very easy way to answering those is to fill those plug those methodology gaps by doing the curriculum. And 1M1M Basic is our curriculum-only program. You can sign up for 1M1M Basic and start learning the methodology. So dig around on the website, what to expect from Premium, Basic, video FAQs, you'll find tons of information, details about the curriculum. we're a case study-based program. Over 750 successful entrepreneurs as well as tons of investors are part of this process of building this curriculum that we've put together. So you learn a lot from just using this curriculum and, essentially riding on top of the body of work that we've put together for you to learn from. The methodology is lean, capital-efficient, bootstrap startups. And if you want to raise money, it's bootstrap first, raise money later, because investors are looking for validated businesses. There are very few investors who would fund pure concepts. That's pretty much it. We have free roundtables. There's one more before Thanksgiving. And then after Thanksgiving, we have December 7th, 14th, and 21st, and then we break for the Christmas holidays. So, this year there are 4 more. Sign up, go to the website, to the free public roundtables URL, and go sign up to attend or pitch. And we look forward to working on your ventures. We also have in-person meetings. We have a rendezvous, in-person rendezvous this afternoon at 5 p.m. at Cafe Boroni in Menlo Park, and then another one on December 13th, also at 5 p.m. in Cafe Boroni in Menlo Park. So we have, online rendezvous, in-person rendezvous, and then we have this extensive program where you can work with us using our methodology, using our learning materials, and so forth, and the online mentoring sessions. So that's pretty much it. We are open for Q&A. You're welcome to go dial in or type in your questions in public chat, and I will start picking up questions from public chat now. Meanwhile, let me also introduce you to Irina Patterson. If you have questions about the program, feel free to email Irina at 1Mby1M.com, and she'll be happy to talk to you by email, by phone, by Skype, whatever makes sense. Okay, let me go to Q&A in the public chat. Mahesh Sharma is asking if I may ask a question. Of course you may. As an Indian consumer, I have used some of the larger tracking services like Agarwal, ABT. They give me more or less this tracking and the smooth experience that you have highlighted. Now, if I want to go for an ad hoc truck for moving, I would, and I'm sure many would go for the cheapest deal. So do I pay extra for the facilities that you are offering? Mahesh, I don't think Mithun is doing a consumer service. He's doing a B2B
that's right.
Service. Yes, right. So Mithun, feel free to weigh in on what he's asking, what Mahesh is asking.
Yeah, first thing is we're not trying to be the U-Haul of India. No. And I think with respect to Agarwals and everybody else, yes, they're all large transportation providers, but you have to go into their offices to make a booking. It's not readily available on demand at your fingertips. It's a big methodology difference. Anyways, I'll not hold you up. I'll hear your thoughts.
Okay, other questions. Folks, there are a lot of people in the room. Feel free to also introduce yourselves. One of the things that we like to provide here in these sessions as well as in the in-person sessions is an opportunity for peer-to-peer networking as well. So if you introduce yourselves, tell us what you are doing, and tell everybody in the room who you are, where you're dialing from, what you're working on. It's a great opportunity for peer-to-peer networking. And I'll tell you a story from our last in-person meetup in Menlo Park. We had one of our premium members was there, actually two women who are in the premium program, and they were talking about what they're doing and what they're looking for. And there was another person in the group who suggested that the problem domain that they're looking at is a problem for his company, and he is willing to, discuss their solution as a customer on behalf of his company. This person is also bootstrapping a startup with a paycheck, so he has his day job and he's doing his own entrepreneurial venture, which is why he came to the event. But he's also was willing to try the solution as a customer on behalf of his employer. So there's a lot of interesting serendipitous opportunities for networking and connecting and getting things done. And we like to get to know the community and see what dots we can connect and so forth. So feel free to introduce yourselves in public chat. Who are you? Where are you joining from? What brings you to 1 million by 1 million? What are you working on? So questions, comments, introductions, all are welcome at this point. Mahesh Sharma from Oracle, Bangalore, working in AI outside of work. And Mahesh, you have applied for the 1M1M scholarship from Oracle. I've seen that. Yes. Anybody else? Samir is saying he loves this roundtable. Glad to hear that, Samir. I love these roundtables too. I've learned so much from working with all these entrepreneurs from all over the world for so many years. It's been incredible. Anybody else? Questions, comments, introductions? Samir, where are you located? Feel free to introduce yourselves, guys. Minneapolis. And what are you working on? So by the way, as you can see, the testimonial that's on the screen right now, Abhishek Rumta, he came to see me just recently. He's been in the program for a few years earlier on. Company is doing over 10 million in revenue, and it's thrilling to see these kinds of numbers. Working on a compliance regulation idea, okay? And Fahad Karyambat, Fahad here from Oracle, attending second roundtable live, great insights. Good. All right, folks, I don't see a lot of questions, and I will let you go. Let's reconvene here for the next roundtable, and please feel free to go to the website and register to pitch if you'd like a slot, and Maureen will get back to you with instructions on how to move forward with that. I look forward to working with you. Remember, this is a working session, right? So we are here to work on your venture, strategize about your go-to-market, strategize about your funding, and so on and so forth. And we'll continue to do that week after week after week, month after month, year after year. See you soon. Bye, everybody. Thanks for coming.